Okay, folks, welcome to Swing Trading. What's Swing Trading today? Sunday Night Stock Market Futures Live. This is Bob Desmond over the Contrarian Trader, and welcome. Thanks for spending your Sunday night with me. I hope everybody had a really great Thanksgiving. What you're seeing in front of you is my dashboard. Unfortunately, I'm working with one monitor less than what I'm normally used to because I got a new CPU, and I am working off my cell phone, reading the comments. Carlton, hey brother. Good evening, Mr. D. I did not ask about Beezer last Sunday. Cost per share. So yeah, I mentioned Beezer Homes. I'll go over that tonight for you, Colton. I mentioned it over the weekend on the week ahead commentary, which is where we discuss with members stocks we're watching, the positions that we hold, we'll do a review on, and we'll take a look at the markets from a higher level view, a weekly view. And on Wednesday, what we're going to do is we're going to go over the monthly charts of how we closed out the month of November, how we appear poised to end into the end of the year, and of course, what our strategy will be. You bet, Colton. So let's... I'm trying to fire up my tablet here. The battery's dead, but I am working off my cell phone, reading comments, and that seems to be working well. So what we're going to do is we're going to go over the economic data that is set to be released this coming week. I also am learning Street Smart Edge by Schwab. I think I am much newer. Okay, gotcha. All right. So after we get done with the economic data, we're going to segue over into the headlines. Some of the headlines that are out over the weekend, I thought would shake the market somewhat, and we'll let the futures market settle down here a moment. The dollar is doing what I would expect it to do on the heels of the headlines that are really concerning me at current. So again, we'll go over the economic data, then we'll go into the headlines, and then we will talk the futures market. And at 7 p.m. Eastern Standard Time tonight, members will be going into a members mastermind session where it's a private group session with members, and I review the symbols that they would like for me to review on video. So let's get to it. Economic data set to be released effective tomorrow. ISM Manufacturing Index. Remember that manufacturing here in the United States is in a recession. It's in the books. And when you have a read below 50 in the manufacturing index, that's a sign of contraction. And you can see that the previous number was 48.3%. That is a contraction in manufacturing. We're going to get some construction spending coming out for October. This is jobs week. I call the government numbers on Friday the pimp Mac Daddy of them all in terms of economic data, and that's coming out on Friday. But first, we're going to have to entertain the ADP employment numbers. Then later in the morning on Wednesday, we're going to get the ISM non-manufacturing numbers. At current, that stands at 54.7%. That was the read for the prior month. Now, we want to make sure that that number comes in above 50. If it does not, if we see a 40 handle or we're flirting with a 50 handle on the non-manufacturing index, that's a major problem for this economy because you already have manufacturing, which is a far smaller segment of the economy than what is services. But if you begin to see a contraction in non-manufacturing, that spells a major problem for the, I was about to say the Federal Reserve, but in reality, it's the president, okay? He has a problem. He needs to get reelected. Factory orders on Thursday. And of course, again, on Friday, the non-farm payrolls. So a lot of economic data coming out this week, and most of which are market movers. Let's get to the headlines that I find concerning going into the week, and the markets may not agree. I just find them concerning. So the news out of Hong Kong is not good. Yet the president who signed off on legislation that was passed by both sides of the aisle, Democrats and Republicans, they can't agree upon anything, but they can agree upon Hong Kong. And they are supporting the protesters, and by virtue of the fact that the president signed off on that legislation, the Chinese flipped out. What they're going to be able to do about it, I don't know. Walk away from the negotiation tables, who knows? We'll find out this week. The fact that you have this type of turmoil in a totalitarian state, it's unacceptable to them. They feel like their backs are against the wall. And here's what gets them. Here's the rub for the Chinese communists. Hundreds of protesters marched to the U.S. consulate waving American flags to show gratitude for U.S. support. This is killing the communists. So they're going to have some sort of a resolution here at some point in time, and it's probably not going to be a pretty one. Hey, Patrick, how you doing, brother? Hope your Thanksgiving was well. Same to you, Colin. And what I find far more concerning that came out over the weekend was this headline here. China braces for December D-Day, the unprecedented default of a massive state-owned enterprise, aka SEO. And it's not search engine optimization, state-owned enterprise. And they are preparing the markets for a failure of one of them this coming week. So I'm going to go over a chart of Yang, which is the short China ETF. We'll go over that in a moment because the Chinese markets are not looking good. You're seeing a lot of bullish action on the bear ETFs. We'll take a look at those in a moment. But first, before we go to the charts that we're watching for the coming week, I want to talk about the futures. Let's bring them up. Let's see how we're opening up here. We'll begin with the stock market futures. We are up at current. Hey, Sam. So the S&P futures are in a consolidation. They're looking fairly good at the open here anyway. We need to see a breakout. We did do some buying last week of stocks, the consumer discretionary names. Let's check out the Russell 2000. A bit extended here. Where are my Bollingers? I had to transfer everything over to a new CPU today, a new processor, and I am all sorts of in disarray this evening. So we'll do this without the Bollingers. We don't need it. I'll bring it up later on. All right, so you can see on Friday, they spiked the IWM higher only to sell it off. And we are rallying back at current. But Friday was not a wonderful day. Let's take a look at the US dollar. Now, the dollar had a horrible day on Friday in that it flashed a bearish key reversal on the day. We are seeing us trade off the lows of the session now, and this makes sense if we begin to see a bid under the US dollar. Why? The reason is that generally when you get negative news out of China, specifically as it relates to the trade talks, you see money move into the dollar. Normally you'll see it move into gold as well as safe haven plays. But this price action on Friday was pretty bad. So we'll see how we hold up overnight. Gold had a very, very good day and week last week. Now, you can see that we are pulling back, very weak, but we did rally up and into resistance on Friday, and we bucked the strength. And this is what I discussed with members on the week ahead commentary. I went over the chart of the 10-year yield, and the 10-year yield flashed a bullish key reversal last week, and gold traded up as well with a bullish key reversal on the week. That generally doesn't happen. So really what it was gold shrugging off higher yields. Very interesting trade. And I'm going to want to take a look at bonds as well. We'll go with let's see if we have the 10-year. Yeah, we do have the 10-year here. Bonds are falling out of bed. This is a 4-hour chart. This is today, and we are weak. So that means that yields are pressing up higher. And honestly, it makes sense because that bullish key reversal on yields is not bullish for bond prices. It's actually bearish. So the price action that we're seeing at current makes sense. Unfortunately for us, gold is taking it on the chin right now as well. So we'll see whether or not we break this lower band of support and close there on the 10-year bond. It's very, very early in the session. Let's see what else we have to go over here. Sam, video quality is not so good, Bob. Are you? Yeah, I am on the new computer. It's not good, huh? Yeah, the current resolution. I have to change the resolution settings here, Sam. Thanks for that. All right. Thank you for that. I'll figure it out. I don't want to waste everybody's time here. My apologies. I just had this loaded up earlier today, and you're doing okay, Patrick? Patrick, sold a few Nugget 28s for the week Friday. Look to sell some 29s or 20. Right now, it looks like it's a safe play. Going into this coming Friday? Yeah, all right, I see it here. Yeah, this Friday. All right, good. Just watch for a new weekly high, Patrick. Before you go opening up another position, that's what I'm doing right now. Right now, if I see a new weekly high and a breakout, if you go to the weekend commentary, I went over the weekly chart of Nugget on both a daily and weekly basis. We're right there, ready for a breakout. So I wouldn't let the price action current on gold influences all that much. I mean, we have a higher low versus the 12th low, November the 12th. We broke out here on the 28th, pulled back almost. Well, we retested here. We put in the higher low on the 29th and a follow through to the upside on Friday. So we'll bring up Nugget for a second since we're talking about it. What the heck? Let's bring it up. Obviously, there's not going to be any price action for today, but we could see how we closed out the week. And we closed right at a resistance level on Friday. And a pullback makes sense. And again, we have a higher low put in. This is what matters. And what we're looking for here is a breakout above this upper band of resistance. And if we get that, I want to be very, very careful with selling covered calls that are front week, meaning those that expire this week. I want to take a look at selling the December 20s, perhaps even going out into the first week of January, going out to a 40 strike price, which we currently have, maybe to the low 40s, because what I'm looking for is a breakout on NUGT, on gold itself. Silver is setting up very, very nicely. Again, I went over that with members yesterday. Silver, our daily chart looks really, really good. And I don't want to cap my gains by selling covered calls that are front week too heavily. If you want to scalp some profits using a portion of your position, go for it. Let's see, any other comments here? Not selling all. Good. Smart move. I'm reading off my phone the comments. I'm trying to get my tablet loaded up here. It's just not charging proper. Everything goes wrong when you go live. Okay, so what else? Oil. Oil had a really, really bad day on Friday. Absolutely decimated. Look at this drop. So we'll bounce back here, but I would not go buying oil right now, or the energy sector for that matter. Let's take a quick look at nat gas. It got hammered as well, but the positive thing about nat gas right here, right now, and this is what I mentioned last week about the UGAZ trade. It closed down below that weekly support level. We'll take a look at that chart in a moment. What we did on Friday is that we tested prior support and reversed to close back above it. That was the 29th. Here we are at the open at current holding support. We are up. All right. So energy looking iffy here. I just want to check out the Japanese yen really quick. All right, so it's pulling back. I was hoping for better things to happen on the Japanese yen. Leave off with the euro, and we'll go over to the stocks that we're watching. All right, so the euro not doing much. This is good. We're going to see a bit under the dollar here. Let's go back to the dollar really quick. It's technically down right now. So the currency markets are really sending mixed signals here. I'm going to leave off with gold because I am very curious with how we trade early this week. It continues to remain weak this session. Let's go over to some of the charts that we're watching. I mentioned Beazer Homes earlier. Colton was looking at that as well. We'll bring that up. Let me check my comments first. Hey Richard. Yeah, I don't know about shorting SPY yet. We'll take a look at it. I'm reluctant at current to go shorting the market. So here's the beauty of tomorrow being the first day of the month. The beauty is that we have a lot of data from last month in the books. How do we close out the month? Pretty good. So what we'll be looking for early next week is whether or not we make a new monthly high. If we do, the probability of me opening up a short trade anytime soon is improbable. We'll probably be looking at the short side maybe into the beginning of the year. Now, if the markets begin to place a lot of emphasis, a lot of concern on this China situation is for real. You've had them bailing out bank after bank. Remember, their debt to GDP over in China is twice ours. It is enormous. And they have really no transparency in their banking system. And even the companies that are here that are traded on our exchanges, they aren't held up to this level of scrutiny that our own companies are held up to. So, we've really made a bubble within a bubble by allowing so much money of ours, pension money, to go over and into China. Good luck getting that back. So this could be a blooming problem as we move forward. So I follow China quite a bit. We're going to go over Yang in a moment because the markets are sending us a signal out of China. It's reflected in the headlines. It is reflected in the share price as well. And for those folks out there, Thank you for joining. If I could ask you to click that like button, I'd really appreciate it. It helps me out with the YouTube algorithms. And subscribe. Click that subscribe button and hit that that bell button. You get notified when I go live in the future. Thank you very much. And for those that just joined in, I hope you had a happy Thanksgiving, and I'm looking forward to the remainder of your holiday season or our holiday season. And let's go on. Let's do this. Let's go over to the charts that we're watching. I brought up Beezer first. Let's go with Beezer. I think I even have an alert set here for Beezer. Okay, no, I don't. All right, so let's go to we're going to do a top-down approach on Beezer, meaning, especially now with November in the books, we want to know, how do we close out the month? How did we do? Not that I own it. How did it do? It did okay. It closed off the highs of the month. But what we'd be looking for here is a continuation breakout on the month. We're kind of in no man's land right now, the middle of a trading range. You have the 20-period moving average, which is TrendSpider changed up the drawing tool on me here. All right. That's what I'm looking for. Okay. 16.79 is the number. We want to see a rally and a close above that number from a monthly perspective. Oh, and if you click that link below to TrendSpider, it's in the description area. On YouTube, they're doing 40% off for the month, and I think on the yearly they're doing another discount. So you may want to go check them out if you're looking to get involved with TrendSpider. They have really deep discounts right now, so please take advantage of it. I think it expires tomorrow, the 2nd. Let's go to a weekly chart. I like the weekly setup here better from a buying perspective. Again, they changed this on me. There you go. That's the one I want. Okay. So what we'd be looking for here is a rally. I'm going to create my alert. I don't care if it touches. All I care about is a close above the upper band of resistance. Now the key here for the home builders is that you need to see yields stay low. If you begin to see yields press higher and flirt with a two-handle, I think that you're going to see these home builders begin to weaken up, because that's what happened the last time yields began to head towards a two-handle. The home builders just began to weaken up because people are broke. The society is broke. They need low yields. Let's keep this active for the next 10 days. Allow it to fire off twice. So we are good to go here. Beezer Homes. That's what we're looking for. Breakout above this upper band of resistance. And taking a look at a daily chart. Here's the same upper band of resistance. So I think a close above the 15.81 level makes it very, very attractive to the long side. RSI looking good, putting in higher lows. Stokes, same deal here. It looks good. Let's look at UGAZ. I want to pay particular attention to the weekly chart, folks. And here's the break that concerned me. Patrick, I believe you booked profits on this one, right? Cherry trade. Is that a play off a tasty trade? I see your icon there. That's cool. Welcome. BABI. We didn't go over that last weekend for you, Sam. All right. We'll take a look at that one. Richard will do. Very good. I like that. Cherry trade. Okay. Emblay, Bob, will you run any Cyber Monday discounts for the contrarian trader? Yeah, I was thinking about it. I don't do a lot of discounts. I was thinking about doing I usually only do them. If I do them, I do annuals. And I was thinking about doing a buy 1 year, get another one free. Like, so for 1 yearly membership, you get 2 years. That's what I was flirting with. If anybody finds that interesting, I'll put it together. I wasn't going to do it. I'll put it out there right now. If you find it interesting, I'll make it happen. I'll send out a discount code. Just make sure you're on our email list. And if you go to the website, just enter your email address anywhere. You'll get one of those annoying pop-ups, and you'll definitely get a notification of when we send it out. Okay? And, of course, current members, you're eligible for that too. So, of course. All right. So let's go back to UGAZ. All right, I want to avoid this right now because we saw a nasty break of critical support last week, and I just want to see where the bottom is here. And at current, given this weekly chart, the bottom could very well be down at a 7 handle at current. We closed out the week in the single digits at 9.27, and the next real critical support level is down here, and that's at a 7 handle. So I'll be very, very careful if you are currently long of UGAZ. I would not go adding to the position. You know, I did mention that the futures are looking okay for natural gas. But honestly, it's so early in the session. You know, this is probably a dead cat bounce. May not be. Maybe it is the bottom for all I know. It's just worthy of a rally, a pullback, a retest. Let's see whether or not that support level holds. If it does, great. Maybe a green light. Then you can start adding more. Right now, all we're doing is we may be putting in a bottom. All right. If you take a look at the weekly chart, which is the higher level chart, we are not looking good here. We close, let's call it right at support on a weekly basis. Now we need to see whether or not, because we opened up below this lower band of support on a weekly basis, do we close above it by Friday of this week? That's the question that's to be asked. And the pressure's not on us. The pressure is on UNG or Nat Gas spot price or UGAZ to show us that it can close back above a support level. If it does, well then, maybe we have a retest of a lower band of rising support and we can open up a position here. Until Friday next week or this coming week, I'm not interested. I don't want to touch it. So just be very, very careful here. See if I have any comments here. All right, so you re-entered on this, Patrick? All right. But you booked profits, right? Patrick, I'm going to bring up the photos one day this week. Patrick was good enough to drive down with his lovely wife, Amy. Very nice lady. Patrick, a gentleman, drove down from Connecticut, brought me, I don't know how many pounds of fresh deer meat. Thank you, Patrick. Thank you to your lovely wife, Amy, as well. I'm going to bring up the photos. We took some photos together. And I went over to Mac's Steakhouse where you had dinner. And I had dinner there Friday night with the kids, and it was a great time. He said that you had stopped in, and he enjoyed having you, and he said to say hello. So Patrick is a great guy. Thank you very much, Patrick, for coming down and really going out of your way. Thank you very much. And I will be enjoying that meet, no doubt about it. All right, so let's go back to the charts. Let's take a look at the S&P 500. The question that was asked was, is it time to go shorting, was by Richard. Is it time to go shorting the S&P 500? So what we were able to do, let's go to a monthly chart, we'll do a drill down. Okay, so we don't need all these lines here. All right. So what we did last month, you can see that we have been in a long-term rising uptrend channel. Oh, and the question may be, going back to the Cyber Monday deals, for silver and gold level memberships, yes, you still get TrendSpider for free with those levels. So yes, just in case it's a FAQ that I didn't respond to in advance, I wanted to get ahead of it, yes, it's included. So the spiders were able to break out above this upper band of resistance in the month of November. It's a clean breakout. We closed just off the highs of the month. I wouldn't want to go shorting this at current. We may get a pullback and a retest of this breakout point. That may be a buy signal though, meaning that if we close out the month of December having retested this support level, all it means is that it's been validated as being what was resistance is now support. Now, if we close down below the support level this time, but if we don't, let me rephrase. If we fail to hold the support level, then you may be looking at a short opportunity because it could not hold its mud. And even if on a weekly chart we fail to hold this breakout point, you may be able to short it for a scalp down here to on the spiders 307, spot 33. I would look to book profits until, of course, at such time we begin to break support levels, and of course we begin to put in lower highs and lower lows. That's really when I want to begin shorting this market. And when you take a look at the S&P 500 again, from that higher level view, let's clear off all of these. So here is our uptrend line. You know, what's not to like about it? And if we fail to hold this support level, then the spiders have a big problem. But at current, we appear poised to put in a new weekly high. So I would not look to short the S&P 500 at current. That could change though, depending upon the geopolitical risks out there. Daily chart, we're holding support. The path of least resistance remains up for right now anyway. That could all change. Let's take a look at Alibaba, or Sam. Now this is a Chinese stock. Sam, do you know if Jack Ma is still listed as the CEO and chairman on this stock? They wiped him out of, this is the wrong symbol. They wiped him out of a lot of his equity. The Chinese government did. All right, so last week we saw what we were looking for, and that was a breakout on Alibaba. So Alibaba is looking good here. Let's take a look at a monthly view. Nice sound base here. RSI putting in higher lows. And it is broken out to new higher highs. So on a pullback, I think that Alibaba could be bought. And I would look to add more on a continuation move higher on a weekly basis, because if you're putting in a new weekly high, that means you're putting in a new monthly high. Let's go to a daily chart. I'm getting a little bit long here. Okay, so on Friday, what we saw was an inside day, no new high, no new low, no big deal. It's a consolidation. We have resistance immediately above here at 203.66. We closed at 199.65, 4-hour chart. All right, so the trade here, I think, is, again, on a continuation move higher. I don't like this. On a continuation move higher and a breakout on a 4-hour basis. There you go, that's better. I want to know when we do that. All right, so this is a continuation move breakout. We're going to keep this active for the week. Triggered twice. I want to know pretty quick when that happens. So once we see a breakout and a close above this upper band of resistance on a 4-hour basis, then we'll begin looking at possibly getting long of Alibaba. And even if it pulls back to a support level, we would look to open up a trade, scratch the itch, then buy on the breakout. Let's see what else we have going on here. What was support for SPY? We'll go to that. So Zhang is the CEO. Yeah, Jack Ma. They really did a number on him. I'm getting nervous on Alibaba again because my indicator says 245 resistance. Yeah, there's no doubt. There's definite resistance. Richard, I'll get to your question in one sec. There's definite resistance above here. As a matter of fact, I'll stay on the 4-hour chart and I'll illustrate using the secondary time frame right here. You have resistance right at 203.83. That's the number to watch. So we're on a 4-hour chart. However, I'm overlaying daily resistance levels. And if I wanted to overlay weekly resistance levels, I could do that as well. But nothing's showing up here. Actually, it is. It's up here. All right, so if we break out on if we close above 203.86, Samuel, I think that will go a lot higher because weekly resistance is all the way up here in the 220s. So just stay light right now. Look for close above 203.83. If we close above it, then you can add more to your positions, average up on the trade, and look for the 220s to be the next stop. But I would caution. Keep an eye on Yang. Keep an eye on the Chinese headlines. Keep an eye on the Chinese leveraged ETFs because they're setting up very, very nicely here. So here's Yang weekly chart with monthly support and resistance. So last week, I think we may even have broken out on a weekly basis last week. Yeah, we did it back here. The week of the 11th, pulled back, retested once, retested twice. These Chinese leveraged ETFs are beginning to break out to the upside. And if we see a new weekly high, we could head up to 61.22 on Yang. So just be aware of the fact that this is what's going on with the leveraged ETFs that are bearish ETFs on China when you're entering BABA. In fact, what I want to do here, I want to know if we put in a new weekly high. All right, we'll keep this active for a while because this is one of those situations over in China that I fear a lot. You should really watch Keith McCullough on, actually Kyle Bass, not Keith McCullough. Keith McCullough just did an interview with Kyle Bass. It was really, really good. So Keith McCullough is on Twitter. He also has a YouTube channel. Kyle Bass, very intelligent guy. If you want to know somebody that's in the know with regard to what's going on over in China, Kyle Bass is the guy to listen to. Don't listen to me. Go straight to the horse's mouth. That's where I get a lot of my information from, is Kyle Bass. Very, very smart guy. I don't even think they'll let him in China, to be honest with you. He knows way too much, and the picture that he draws is very, very scary. And also, his name slips my mind. Jim Chanos. Jim Chanos brought to my attention many years ago the ghost cities over in China. And there's a lot of reason to be very, very skeptical about that economy not beginning to really fracture. I mean, the headlines are, it's not just the headlines, the banks that keep having to bail out the banks. Now you have this going on, not to mention Hong Kong, forget Hong Kong. A state-owned enterprise. If you're just joining right now, get ready. This is going to happen this week. China braces for December D-Day, an unprecedented default of a massive state-owned enterprise. I don't know how you ignore this. All right, to Richard's question, support on the SPY. Really, Richard, you know, we're at all-time highs right now, right? So from a short-term trade perspective, I want to know when we put in a new weekly low. That's true. That's support level number one. I want to know. Are we beginning to start putting in, are we beginning to see new weekly lows? So to answer your question, in the very short term, what is the first key support level I'm looking for on the S&P 500 or on the spiders? 311 spot 98. Now, if you want a very, very critical support level to watch, it's right down here. 307. If we break down below this level here, I'm going to keep this a little bit loose. I want to know if we break through. I want to know if we touch. I want to know if we bounce. S&P could be a buying opportunity. Could be a shorting opportunity. We don't know. We're not that smart. We need to see how the market handles a sell-off in the S&P 500. It could be that we're simply going to retest the support level, and that's it. And we just consolidate, and then we begin to break out yet again. So simply because we put in a new weekly low, doesn't mean that we want to go short in the market, unless, of course, you're doing a scalp at this key support level when we hit it. And this is really just going to act as a reminder of why we set up this alert. We'll keep it active for the next few days. And we're good to go. And if you wanted to create an alert right below last week's lows. If that gets taken out, that's a problem. I mean, even on a daily basis, if you wanted to tighten it up, you want to know where support is. We've pulled back off of the highs. So honestly, where I short-term, I am a short-term swing trader. Were I looking to short-term swing trade this market higher, I'd want to know if we broke 314.08. And I would also want to know if we break out above this upper band of resistance. So there are multiple support levels here. Some of them are fluid, meaning that they could be broken, yet we could still bounce back, no problem. The one critical one is right here. If we close down below this level, that spells trouble for this market. So I hope that answers your question. Let me go back, make sure that I'm answering all these questions. Arthur! All right, so Arthur's got a factoid here. China goes cities. Here's a fact to ponder. China poured more concrete in 3 years, 2011 to 2014, than the U.S. poured in the entire 20th century. Hey, can't argue with that. Good stuff. You're welcome, Richard. Anytime. Craig, how you doing, brother? Happy Thanksgiving to you. Hope you had a great one. Santiago, do you think the markets are overbought right now? Overbought is a dangerous term, and I only say that because a lot of people, and this went back to my days of learning technical analysis, using the Stokes in particular, and this is my long-winded way of answering your question. I try to be careful when using that terminology, because sometimes if I say the market's overbought, people go, okay, it's time to go shorting the market. Nothing could be further from the truth. Markets could stay irrational far longer than we could stay liquid. So it's critical to remember that. So are we long in the tooth here? Sure. Think about it from this perspective. Let's bring up one of my charts that I haunt members with, because I always try to keep them thinking longer term, the big picture here. And I'll probably leave off with this chart here. And this is really just to keep everybody safe. My quarterly chart, 100-year view, the Dow Jones Industrial Average. So I'm going to drill down here, and we'll make this a little bit more cleaner. But obviously, we are very long in the tooth from the lows of the financial crisis. This is I believe, the longest bull market in history, if not the second, but very long in the tooth. We're 11 years into a quote-unquote expansion, and it's unheard of. So this market is being propped up by the Federal Reserve. If anybody doesn't believe that, you really need to rethink why you're long of this market. You need to understand that the market is quite expensive. Were it not for the Federal Reserve, let's drill down here to a closer view. Were it not for the Federal Reserve coming in to save the day this time last year, we were breaking this time last year. December of last year was a horrible month for the stock market. And I'll note that during that month, we even put in, actually October, I'm sorry. This is a quarterly chart. It was December. Yeah. Okay, so we broke down in December. This is a quarterly chart, sorry. So far this month, or this quarter, we have a continuation move higher on a quarterly basis. We're trading at current at the highs of this session. I mean, this is still a very bullish setup. We're breaking out of a quarterly bull flag setup. We have broken out. This quarter, we're seeing a continuation move higher. So is the market overbought? Yeah, it's overbought. But I could have said that here. I could have said it here. I could have said it here. But all the while, what were we doing? Going higher. So the higher level view, the macro view, is that yes, the market is overbought, but it could stay overbought. If you're nervous about the market, simply drill down. We'll drill down now to a monthly chart. Monthly view, I should say. At current, we are trading above the 2 standard deviation Bollinger Band on a monthly basis. That's not unheard of. We can continue higher here. Are we quite probably moving into a blow-off top? Probably. But my theory on this market has remained unchanged. I believe that they are going to, with bubblegum and shoestrings, they're going to keep this market poised to at least stay stable with a bias to the upside into the 2020 elections. After that, I don't know what's going to happen. I really don't know what's going to happen. I mean, I know what should happen, and they really need to begin to let the air out of this bubble as gently as possible. But I don't think they're going to be able to control it. So at current, we are overbought on a monthly basis. We can head higher here. You want to drill down to a daily basis? Let's use a different chart. We'll go with the Dow again. We'll stay consistent here. Is the Dow Jones overbought? Yeah, if you want to use the theory that Stokes above 80 are overbought, yeah. I mean, we're extended here. There's no doubt about it. We're putting in a lower high on RSI, but we haven't broken support yet. The trend is still up. So if you're nervous about this market, I don't blame you. I'm nervous about this market, but that's not going to keep me out of it right now. It'll keep me long, heavily long of the miners, gold, silver, because once this market goes, you're going to want to own all that stuff. So we're very, very positioned well for a market break. So now we're able to speculate to the long side. And I do believe that if you're buying this market right now, you are speculating. And you really need to keep tight stops. And right now, looking at the Dow Jones, if we break 27,750, there are a lot of problems for the Dow Jones then. All of a sudden, my cautious tone at current changes to pessimistic. And I'll be watching the weekly charts, the monthly charts, the quarterly charts, looking for that break. And then we'll decide if it's time to go shorting this market. Okay. Arthur, read that in Forbes. All the Chinese information? Yeah, good stuff. Gold stock, CDE. Happy holidays to you, pal. Craig, long-term. God, how many years have you been with us, Craig? How many years? My God, long time. So yeah, we'll do that for you. CDE. Oh, Coir Mining. I haven't looked at this one in years. Let's do a top-down look, and we're going to leave off with this one, and then we're going to go into the members. Wow, pretty chart. We're going to go into the members private group session. I'm going to throw up some lines here. Now, what we're looking at is the monthly chart. That makes sense. Okay. All right. So, we broke out here. The week of this is a monthly chart. In August, we broke out, consolidated sideways. Then we had a very nice continuation breakout last week. A very, very nice move. The problem here is that what happened is that, and this is not to minimize the week that it was, a powerful week. We rallied up and into resistance at the 6.71 level. We actually overshot it. Then sellers moved in. So what you have here is a case of pure and simple overhead supply. Those buyers from back here, they've been sitting through this downtrend. All they want is that red entry on their trading platform to turn green, and they want out. They're not looking to make any money. They want to get made whole, and they're going to sell. So you're going to have to deal with that for a while, but the monthly chart is looking good here. We have a nice W formation on RSI, higher lows, higher highs. We have a breakout. Stochastics looking rock solid. So the monthly view, the higher level view, looking very, very good here. Weekly chart. So on a weekly basis, and if I said earlier, I apologize. If I said we broke out last week, I meant last month. I apologize. Weekly chart. So we had a pullback off the highs of the week of the 18th. Last week, we put in a new weekly low. But what did? We reversed to close higher. So, and very close to the highs of the week. So it looks as though we may make a run at resistance yet again this coming week. We have more room to the upside on RSI and on the stochastics daily chart. In fact, before we go to the daily chart, let's throw some overlays up here. Oh, this is nice. So here you had a breakout above not one support level or resistance levels, but two. So you got a 2-for-1 deal, right? So breakout. Last week we pulled back and we did a retest of support. This is a validation. This is not weakness. The fact that we put in a new weekly low last week, it simply validated the breakout. And it appears as though, again, we're going to make another run at new weekly highs, if not another run at resistance. And it's probably going to break out here. So it looks good. And folks, if you're just joining in, if I could ask you to click that like button, I'd really appreciate it. Thank you. Let's go to the daily chart. What's not to like here? So, breakout daily basis. Here's where I'd be looking to put my stop in. Right below this lower band of support here at around 6.22. I like the setup. I think it goes higher. I'm bullish on the miners. I think they had a great week last week. And with that, 4 years. I think it seems longer. So yeah, Craig, CDE is looking good. Looks good. Just beware of that overhead resistance above. I mean, you really need to respect this, because this was the way to view this resistance level back here. Let's get rid of is that, forget that this even exists right now. If you were a holder back here, you'd have thought that all these months standing at the support level at 6.71, retesting, and you would have thought it was a great floor that was being built, only to get broken, right? So there were a lot of disappointed people up here that were buyers. And once we clear 894, we close above there, there's going to be a lot of buying going on because it acted as resistance for quite a long time. So CDE is looking pretty good into the new trading week. And that is it for tonight, folks. Thanks for joining in. I appreciate the time that you're spending with me on Sunday evenings. And members, we're going to roll into a members private group session at 7 p.m. Eastern Standard Time. I'll send you out that link. It'll be arriving via email in the next couple of minutes. Everybody have a profitable trading week, and I will talk to you soon. Be well.